Securities and Exchange Commission, SEC. Securities and Exchange Commission, SEC. The SEC regulates the securities industry in the U.S. The SEC regulates the securities industry in the U.S. SEC ensures transparency and fairness in financial markets. SEC ensures transparency and fairness in financial markets. Companies must file reports with the SEC to remain compliant. Companies must file reports with the SEC to remain compliant. Value at risk, VAR. Value at risk, VAR. VAR helps measure the potential loss in investments. VAR helps measure the potential loss in investments. A higher VAR indicates more risk exposure. A higher VAR indicates more risk exposure. Investors use VAR to assess financial risks. Investors use VAR to assess financial risks. Value-added tax, VAT. Value-added tax, VAT. VAT is charged on the value added to goods or services. VAT is charged on the value added to goods or services. Businesses must collect VAT from customers. Businesses must collect VAT from customers. VAT is commonly used in many countries worldwide. VAT is commonly used in many countries worldwide. Peer-to-peer lending, P2P lending. Peer-to-peer lending, P2P lending. P2P lending connects borrowers and investors directly. P2P lending connects borrowers and investors directly. It offers an alternative to traditional bank loans. It offers an alternative to traditional bank loans. P2P lending platforms charge a fee for their services. P2P lending platforms charge a fee for their services. Insurance. Insurance. Insurance provides financial protection against risks. Insurance provides financial protection against risks. People buy insurance to cover health, life, or property. People buy insurance to cover health, life, or property. Insurance companies assess risks before setting premiums. Insurance companies assess risks before setting premiums. Statement. Statement. A financial statement shows a company's financial position. A financial statement shows a company's financial position. Companies must prepare quarterly and annual statements. Companies must prepare quarterly and annual statements. Investors analyze statements to evaluate performance. Investors analyze statements to evaluate performance. Tax return. Tax return. A tax return reports income and expenses to the tax authority. A tax return reports income and expenses to the tax authority. Individuals must file tax returns annually. Individuals must file tax returns annually. Tax returns help calculate the amount of tax owed. Tax returns help calculate the amount of tax owed. Bitcoin. Bitcoin. Bitcoin is a digital currency that operates without a central bank. Bitcoin is a digital currency that operates without a central bank. Bitcoin transactions are recorded on a blockchain. Bitcoin transactions are recorded on a blockchain. Investors buy Bitcoin as a store of value or for speculation. Investors buy Bitcoin as a store of value or for speculation. Tax avoidance. Tax avoidance. Tax avoidance is the legal use of strategies to minimize tax liabilities. Tax avoidance is the legal use of strategies to minimize tax liabilities. Companies use tax avoidance techniques to reduce their tax burden. Companies use tax avoidance techniques to reduce their tax burden. It is different from tax evasion, which is illegal. It is different from tax evasion, which is illegal. Tax shelter. Tax shelter. A tax shelter allows individuals or businesses to reduce taxable income. A tax shelter allows individuals or businesses to reduce taxable income. Common tax shelters include retirement accounts and real estate. Common tax shelters include retirement accounts and real estate. Tax shelters are used to minimize tax liabilities. Tax shelters are used to minimize tax liabilities.